Hello everyone, welcome back. I got a lot of really good ones for you today. Happy Friday, by the way. I hope you have a really good weekend. So markets. Today was a pretty boring day. We saw the 10-year yield come down to 3.2, which was good. Somebody got in there, and bought bonds, drove yields down. That kind of stabilized all other asset classes. Nice boost to the NASDAQ. Otherwise, pretty mixed day. Crude got kind of jaw-jacked, 4 to 5%. I'm not really sure what it closed at. But we're starting to see demand fall. Okay, so energy prices are coming down. Maybe an inventory glut. We talked about how there's shortages, problems with supply chains. Well, now we could be in a situation where a lot of these retailers, like Walmart, are stacking up tons and tons of product, and it is just not getting purchased because consumer spending is on its last about $1 trillion of savings, and consumers are getting pretty maxed out, and now the supply demand is all off balance. We could end up with an inventory glut, falling prices over the summer against a backdrop of a tightening and pretty hawkish Fed. And I could really see that creating enough falling demand to take some of these rate hikes off the table after summer. So markets pricing in an extremely hawkish Fed. Fed's projecting a 4% Fed funds rate by 2023. I doubt it. So what I would like to see is falling demand, falling prices, the Fed to act hawkish over the summer to win a vote of confidence that they're getting inflation under control, but then start taking some of these dozen or so rate hikes off the table. They can blame the ECB for that by saying, well, look at the ECB. They're already needing to put crisis measures in place. Their conditions are already getting too tight. So when you take in the context of the global economy and the context of rising inventories and falling prices in the domestic economy, that could actually give the Fed enough deflation, disinflation to take some of these rate hikes off the table later. Not saying that's a good or bad thing. That would just bring inflation back, the dollar lower, and risk assets resume their march higher. Not saying even a good or a bad thing. I'm just saying the Fed might start to shift its focus back towards trashing the dollar and reinflating the beast system, especially now that we're kind of getting into the danger zone as far as rates and yields being too high. So hawkish over the summer, maybe flip a little bit more dovish. That's kind of how I'm guessing these policymakers proceed. And again, keep it all in perspective. These are doves and baby doves, generally speaking. Hawkish to me would be like Paul Volcker's 1% per meeting kind of stuff. We did see 75 basis points though this week. So, I mean, hey, I'll give them that. And I do expect another 75 basis points in July or 50. I doubt we'll do 100. It'll be another 50 or 75, maybe 75 to really get a vote of confidence that they're getting, ahead of inflation or catching up really. And, maybe they could flip more or less dovish over the back half of the year, because I could see the scenario where rates and yields are structurally higher. We're entering a new era. The whole 5,000 year low interest rates trend has been broken. I can see why players are saying that and why the dollar bulls are really pushing that narrative, and they have a lot of company. But I feel like I know the system a little better than that. And you do too, if you look at their track record of just always defaulting back to more or less an easing stance, especially if the global economy starts to slow down. And the war in Ukraine's not going well. So nothing really good coming out of there. I really hope Russia doesn't shoot for a total victory where they just take all of Ukraine and on their own terms. And it's not because I'm pro-Ukraine or pro-Russia or anything. I just know Russia shooting for a total victory and Ukraine trying to hold out is going to result in the most loss of human life, or just kind of a worst case scenario in my mind. So kind of keeping an eye on all that, but not liking what I'm seeing. And then obviously monitoring the South China Sea and the developments between China and Taiwan. So just kind of keeping an eye on both flanks of the dollar empire, I guess you could say. not really looking too good on the geopolitical stage. But hey, we'll proceed with caution, I guess. We'll just kind of see where all this goes. Bitcoin's too cheap. Okay, Bitcoin's too cheap at 20 in my opinion, because at 20 is when the bank showed up in fall of 2020. So in fall of 2020, when the institutions first showed up, and I don't think they're gonna pack up and leave for good, I think this is only the beginning, they first showed up at around these prices. So I think maybe institutions that were, skeptical about the crypto space or missed out on the first couple hype trains, I don't think they want to miss an opportunity. And so I think they would be accumulating at levels in prices immediately following several liquidity events, just a total wipeout of the space. So I'm tentatively bullish on the crypto space. Bitcoin at 20,400. This is fire sale prices, just my opinion. And a 10-year yield of 5.5%, would put Bitcoin at like 7,000. So, I can see, the case for more downside, and it's really hard to guess a bottom. But in my line of reasoning, I don't see the institutions like Fidelity, Morgan Stanley, JP Morgan, the market makers for Bitcoin, wanting to leave the space. I see them wanting to stay in the space and leverage the future of crypto and finance to its full potential. So DeFi, smart contracts, NFTs, the metaverse, Web3. I don't think institutions are done. I think we're in a crypto winter. I think buying a bear market, generally the book says, is, wise. If you only ever buy a bull market, think about that. So Bitcoin's too cheap in my opinion, but I do like even the other alts. I drink the Kool-Aid, all right? So, ETH, Solana, Avalanche, ICP, sign me up. Algorand, just my opinion. Stuff's not for everybody. But I'm loving the space right now. It's too cheap. What else? We talked about kind of demand falling, inventory gluts potentially appearing over the next few weeks, crude getting jaw-jacked. It's good. Little deflation, disinflation in the system, a hawkish Fed. Things are getting real tight, and I don't know how long we can pretend that we can continue to structurally tighten the global monetary system. I'm not a big believer in what I've been hearing over the last 6 months, where the Fed has forced every rate hike to go down like a rotten burrito, and I just don't know how long they'll put up with that. Especially with Powell reiterating last week, I'm not trying to induce a recession. My policies ultimately affect the financial sphere, which ultimately affect the economy. So I think we'll see Powell shifting his focus going forward less on controlling inflation, protecting the dollar and consumers, and back to the B system. Just my thoughts. Could be wrong, right? Because I'm tentatively bullish. NASDAQ, gold, Bitcoin, oil. Basically, I'm running as far away from the dollar as I can while everyone is running into the dollar, especially right now. So, hey, I know I'm really fighting the herd here. I'm a lonely bull. I feel like the only bull, but kind of is what it is. Just not a dollar suspenders, dollar under the mattress kind of guy, I guess. So that's really all I got for markets, and yeah, not really. Let's just see how the next couple trading days go starting next week, okay? We want to see how the markets digest these Fed meetings. These Fed meetings can take, 3, 4, 5 trading days to kind of go down, for the medicine to go down, kind of digest it and clear the market, and then we establish a new trend. And I'm tentatively bullish, but I know nobody else is, so it's hard for me to stand here and be like, I'm hyper bullish right now. But I know intuitively that the moment when things get scary is not when you run. It's when you lever up and rip the face off the market. That's just me. So we'll see how the first couple days of next week go. We'll see if Bitcoin can carve out a bottom around 20. We'll see if crude continues to come down. We'll see if an inventory glut appears in the domestic economy. We'll see how things keep continuing to unfold in Ukraine and the South China Sea. And we'll be just monitoring a hawkish and otherwise pretty hawkish Fed. And I'm the only one, but hey, I'm expecting the Fed to flip out, at least tone down their hawkish rhetoric, if not flip dove over the next 6 to 9 months. So we'll have to see how all that unfolds. Crazy times, and it's really all I got for you. Have a wonderful weekend. Till next time.